Hello everyone, welcome to EduTap. So in today's session, we are going to discuss a very important news article of finance that the SEBI has tightened the rules of the IPO. Okay, so we will see that what are the rules that the SEBI has tightened or the changed. So before starting with the session, please subscribe to our YouTube channel if you are new to the channel and join our Telegram channel for the PDF of this session. And you can get the link of the Telegram channel in the description box below. So now SEBI has tightened the rules for the IPOs, that is the initial public offerings. So in the previous sessions where I was discussing about the Paytm's IPO, I discussed that what the IPO is. Okay, so IPO is just that for first time that the company is getting listed in the exchange. The new rules will oversee, so these are the new rules, or the new rules will be about this. So how companies set IPO price bands, about this a new rule has come. So see, when the IPO is released, when the shares are coming in the market for the first time, then what happens that there is an IPO band. Like when the Paytm IPO came, there was a band of 2080 to 2140 2150. So this was the band, that minimum this much can be offered and the maximum this much can be offered. So this is the band, and now a thing has changed about this band, which we will see in the later slides. So I'm just telling you that what are the rules about, okay, and then we will see that what are the rules. Through that you will be easily able to understand. Next is, when can anchor investors sell their shares? So see, there are anchor investors. What happens? Anchor investors, I will tell you when I am talking about this point more like thoroughly. So now some rules has been changed about the anchor investors and their selling of the shares. Next is, how can the company spend share sale proceeds? So where they are spending, where they are doing the expenditure of the money that they have gotten from the IPO, through the IPO. So they have gotten like 1,000 crores rupee. So where they are spending that money, that new rules has come about that also. Next is, how much large shareholders can sell on the listing day, that you are getting your company listed in the exchange market, you are bringing the IPOs. So how much the shareholders or the promoters, the big shareholders of the company, how much can they sell? So now we will see all these questions one by one, that how companies set IPO price bands. Now the rule has become that if the minimum price band and the maximum price gap, there should be a difference, or there should be a gap of at least 5%. So the upper price should be at least 5% more than the floor price. That is the lower price and the upper price. Like it was 2080 to 2140 2150. So there should be now there should be a gap of at least 5% in between the lower and the upper band, so that the people, the investors, the institutional investors, the retail investors have more option to bid. Okay, because the gap was becoming narrower and narrower by the companies, the gap of the price band was becoming narrower and narrower. So the SEBI had to brought such a concept that there should be a difference of at least 5%. Next is, how can the company spend share sale proceeds? So before, what was happening, that the companies had no obligations to tell that how they will spend, how they will expend the money that they are getting from the IPO. So now it has become compulsory, you can say, that they have to tell during the offer. When they are doing the offer submission, then they have to tell that how they are going to share. If they are going to do any acquisition, they will have to tell. If they do not tell, then the companies will not be allowed to use more than 35% of the money that they get from the IPO, that they collect through IPOs, to fund the purchase of other businesses, that they will not be able to spend more than 25% on the acquisitions. And this 35% is the combination that they can spend on the acquisition, as well as the GCP, that is the general corporate purposes, like what they are spending day to day. So the combination of the acquisition and the general corporate purposes, they can only spend 35% of the IPO. If they are not beforehand telling that how they are going to spend the money, that how they are, if they are going to do any acquisition, if they tell beforehand during the offer only that they will do the acquisition of this business, of this company, so then they can spend any much, like any amount. If they are doing like 1,000 crore they are getting through the IPO, and they beforehand tell that yes, I will acquire this B company, okay, then they can even spend 700 crore on this acquisition. But if they are not telling beforehand that they want to acquire this company or the specific details, identification and all, then they will only be able to spend 25% of the IPO money of the 1000 crore in the acquisition, and total of 35% can be spent on the acquisition and the general corporate purpose if they are not beforehand telling about these services, that what they are going to do with this money of the IPO. As well as, see, there is another thing, that there now be credit rating agency that will be looking over that are you actually doing what you have told in the offer. Like the company A told that I will be acquiring B company and I will be putting this much money, or I will be just acquiring B company. So the credit rating agency will be looking, will be monitoring that actually you are doing that or not. Actually you are putting money where you have told beforehand or not. Okay, so this is the criteria under the how can the company spend share sale proceeds or the money that they have gotten from the IPO. Next is, when can anchor investors sell their shares? So see, before let's understand what the anchor investors are. So SEBI, Securities and Exchange Board of India, brought this term or brought this concept in 2009. So the anchor investors are the institutional investors, or we can say big investors, large investors, who are invited to subscribe or buy the shares before the IPO opens, so that it becomes more popular. The IPO becomes more popular and trustworthy, because large investors are putting their money. So there must be some worth in that IPO, in that share, in that company. That's why the large investors are putting their money. So it builds up the trust, it builds up the credibility of that IPO, as well as the IPO becomes popular. So before it even comes in the market, before it even comes as the IPO, the anchor investors are the one that already subscribe to the shares. Okay, so the anchor investors, before, what was happening, it only 30 days. After 30 days, they could take out all of their money that they have invested. Okay, that happened in the Paytm case also. But now the concept has become, now the new rule has become that for 30 days after 30 days you can only take out 50% of the money, and after 90 days you are allowed to take out the money. Okay, so anchor investors will not be able to sell more than half of their shares before 90 days. So after 90 days they can sell any amount they want, and the 30 days limit is now for 50%. After 30 days they can sell all 100% of what they have bought, but now after 30 days they can only sell 50%, and after 90 days they can sell the 100%. Okay, so the current time stipulation was 30 days. After 30 days they could have sold all of their shares. See why this concept has been brought, because when the large institutions or when the anchor investors, the large investors are taking out their money, then the retail investors think that what is the problem with that company that the large investors has to take out the money so soon. So that makes the retail investors lose their trust, lose their confidence in the company. And as well as when the large investors are taking out their money in the bulk and at a time, so it also becomes very confusing for the retail investors, for the market as a whole. So that's why the limit has been increased to 90 days, that if you want to take out your money, at least you have to wait for 90 days, and if you want to take out your 50%, then you have to wait for 30 days. Next is, how much large shareholders can sell on listing day. So see, I told you in the starting that large shareholders, before the IPO starts, before the IPO is brought, like in Paytm we saw that there was Ant Group, Alibaba Group, and so there were large investors or large shareholders of that company. So large shareholders, sometimes what happened, that the IPO is brought so that the large shareholders can give away their 100%, like sell 100% of their shares. Like for example, just take for example that Ant Group wanted to sell 100% of their shares. So the Ant Group pressurized the Paytm to bring the IPO. I am just taking a scenario, okay, this is not the real situation. Ant Group didn't sell all the shares. So then also the company brings the IPO. So for not happening that situation, so that such a situation do not happen, it has been said that the large shareholders, the promoters of the company, that are the actual promoters, actual establishers of that company, with a stake of over 20% in a company, cannot sell more than half of their stake in an IPO. They can sell, like after IPO, they can further on keep on selling their shares. But in the IPO, they can only sell 50% of their shares, of their stake, and that also if they have more than 20% stakes in the company. If they have less than 20% stakes in the company, then they can only sell 10% of their stake. Okay, so just remember the terms, just remember the numbers. That's it. That's only thing that is important from this. Okay. So next is additional changes that has been brought. Divide the HNI. See, high net individuals or high net investors. This is the category of non-institutional investors. Okay, that spend too much money in the IPO. Okay, more than 10 lakh. So here I will show you how. So it is said that the HNI category, the high net worth investors category, will be divided into two. The one third of the allocation will be earmarked for applications ranging from 2 lakh to 10 lakh. So what happens that for some percentage of the IPO is saved for the HNI. Okay, so let's say it is 35% is saved for the HNI. So one third of that 35% will be saved for the people that want to put 2 lakh to 10 lakh of the money in the IPO. And if they want to put above 10 lakh, then they will be having 2/3. So it is so that now, even because the people or the individuals or the investors that were putting the high bracket, that were only getting the money. So now, so that even the people that are saving, even the investors that are saving or putting 2 lakh to 10 lakh, so that they also get some share, this criteria has been made. Okay. So HNI, divide the HNI category under which high net worth investors apply for IPOs. So this has been divided into two. A third of the allocation will be earmarked for applications ranging from 2 lakh to 10 lakh, and 2/3 will be of course for the people, for the investors that are above the 10 lakh category. So next is credit rating CRAs registered with the SEBI will be permitted to act as monitoring agency. Okay, so I told you that there will be a monitoring agency that will be looking after what the money has been used that they got from the IPO. So for that, credit rating agencies registered with the SEBI will be monitoring the money. Instead of scheduled commercial banks and the public financial institutions, there will be particular credit rating agencies. Why? So why this changes has been brought? As I told you in the start only, that there were IPOs. These changes were for the IPO. So why? So in India alone, in the whole world, what was happening, that there was a IPO frenzy. Like so many IPOs were coming in the markets, and in India alone, capital worth of rupees 1.19 trillion has been mopped up through IPOs this year. So this much money was put in the IPOs. And why? Because the companies, see, it is the bull market, in which usually a lot of investor money is chasing the stocks and causing them to be overvalued. So there are so many investors that are coming in the financial market, also starting investing in huge numbers. So many new investors are coming in the market, many new people are getting to know about these markets, and they are very excited to invest, especially in the IPO. So these IPOs are getting overvalued. So to tackle the regulatory gaps and extreme shock price volatility, so there is some regulatory gaps that has to be looked over, as well as price volatility. I told you that when the large investors are taking their money out, when the anchor investors are taking their money out, the retail investors are losing their trust. The other investors are losing their trust that what is happening, that why they are taking their money out in huge numbers. So there becomes a high price volatility in the market of that company, especially of the trading debuts of the IPOs. So MCQs for practice. This is the MCQ. The markets regulator tightened the rules for the initial public offering aimed at tackling regulatory gaps and extreme shock price volatility on their trading debut. So according to the new rules, companies will not be allowed to use more than what of the money that they collect through IPOs to fund the purchase of the other businesses, that is for acquisition, and the GCP, that is for the corporate purposes, unless they offer sufficient details. So you have to tell that what percentage. Okay, it is not only talking about the acquisition, it is also talking about the GCP. So give the answer, okay, properly. So these are the people that did really well and answered the question of the previous session. It was Yash, Rishabh, Arijit, Priyanka, Aditi, Arvind, Pratik, Divya, Raj Lakshmi, Timothy, Sugandh, Justin, Divyansh and Jyoti. So well done you people, and you people really gave the right answer, and it was direct question, so I don't think I have to discuss the questions again. So thank you very much. I hope you have understood the news of today. So if you have any query, you can mail us here or you can contact us through this number. Thank you.